Cryptocurrency is a digital asset designed to work as a medium of exchange using cryptography to secure the transactions and to control the creation of additional units of the currency. Bitcoin became the first decentralized cryptocurrency in 2009. ICOs create liquidity and growth equity without giving up equity in most cases, which is why the SEC and other regulatory bodies are having a hard time classifying them. By summer 2017, 1/4 of all blockchain investments over the past 2 years has come from ICOs, over $250 million. The reason why many legitimate startups are choosing ICOs is because they have formed foundations and are building open source software projects, which are typically considered investa non grata by traditional investors and even crowdfunders, as healthy returns are less likely than corporate entities creating proprietary software with patents. The reason why ICOs don't involve equity in most cases is investors are more interested in buying the cryptocurrency at reduced rates during the ICO than seeing their investment rise dramatically when the cryptocurrencies hit the exchanges. Bitcoin crossed $3,754 US, and in 2011 it was worth $1. Sometimes the cryptocurrencies also have utility and can be used for other purposes and not just speculating on the exchanges. And investors have fungible assets as well, like energy blockchain-based cryptocurrencies pegged to kilowatt hours, for instance. So let's take a look at Decent, blockchain content distribution platform, as an example. Their roots were in freedom of speech, but the pivoted to blockchain for content overall formed a foundation in Crypto Valley in Zug, Switzerland, where Ethereum and many other cryptocurrencies are domiciled. And they decided to open source all their software. They raised over $4 million in a month without giving away any equity. No investors clamoring to question decisions based on profit rather than purpose. No VC with a boot to their neck. Plus, they own a healthy chunk of their own cryptocurrency, which gives them even more liquidity for growth in the future. This is why the new cryptocurrency hedge fund Polychain raised $10 million from Andreessen and Horowitz, because the returns on some of the successful ICOs that make it to the cryptocurrency exchanges are massive. Yet there are some scams. There are a lot of ICOs that have ended up in projects that are really going nowhere. Blockchain technology is still in its infancy. 9 out of 10 startups fail in Silicon Valley anyway. Investing in the startup world is a crapshoot no matter how you look at it. How does the ICO and crowdfunding concept intertwine? Well, it's essentially a Kickstarter campaign that uses blockchain-based tokens, also known as app coins or cryptocurrencies or digital assets, to raise money. So cryptocurrencies are kind of money, so long as people ascribe to value to using them and to paying for things with them. The main benefit is the blockchain, the distributed ledger on which they are based. Blockchains let you transact without needing the blessing of a third party or a banker middleman. Bitcoin was the first successful implementation of a blockchain, and it's optimized almost entirely for transferring value securely over the internet. People like to call it digital gold. Then came another blockchain called Ethereum, which is a more flexible twist that aims to create a whole decentralized network on top of which people can build their own decentralized apps and tokens. The crypto markets are highly liquid, so because of the liquidity, prices tend to move a lot. And speculators are having a field day while the world figures out how to price these weird assets. In the meantime, if you're a company or an investor, you can cash out of your Ether or Bitcoin or whatever reserves and hold fiat whenever you like. Or you can play the game and take it like a gamble. Anyone can invest. It is a crowd sale. What would you do? You'd go on to an online exchange where it's traded and make your purchase. Another way of conceiving of tokens is as licenses that give people the ability to use a particular application or participate in a particular network. Smith & Crown, a crypto market research firm, maintains a curated list of upcoming and recent token sales. There's a lot of good information on their websites. Some VC firms like Andreessen Horowitz and Union Square Ventures have already gotten involved by funding cryptocurrency hedge funds to buy up tokens when they go on sale. A lot of crypto boosters compare the present time to the early days of the internet. Some SEC regulators are very concerned because it smells like a security. Well, they use the Howey test to measure the rule on what constitutes a security. The DAO was recently under scrutiny and received a warning from the SEC. But given there were no charges brought against the DAO, it's likely that existing cryptocurrencies are safe from securities regulation for now, although that might not be the case for long. The primary focus of the SEC will be newcomers to the market, with the starting point being the Howey test. Well, there has been little to no impact on the broader cryptocurrency market from the recent reports from the SEC. However, some cryptocurrencies are flying a little too close to the sun, especially those that specify dividend-style payouts for token holders. The SEC is very clear on that just because something is virtual doesn't exempt it from being a security. So should you invest in cryptocurrencies on the assumption they aren't or will never be deemed a security? And when you evaluate different blockchain companies that issue their own cryptocurrencies, check for yourself the characteristics against the Howey test criteria. Still, I don't envision this having any big impacts on the general cryptocurrency prices in the immediate future. In Switzerland, coin offerings are called token generating events. Most tokens are utility tokens to be used within a closed system. Clearly, they are not deemed securities. A token that operates for purchases and messaging within a container, as in our case with virtual worlds of ImaginitTV, it is not deemed a security. It is a utility token. Zug, a Swiss town with a population of nearly 30,000 citizens, has been famous for its dedication to cryptocurrencies. Zug has been called Crypto Valley of the financial world, since many of its citizens are entrepreneurs who specialize in digital currencies. Numerous Bitcoin and blockchain enthusiasts have flocked to the town to take advantage of the entrepreneurial environment and the crypto awareness of its citizens. Last year, the town even began accepting Bitcoin payments for government services on a trial basis. In addition, one of the 10 Bitcoin ATMs in Switzerland is in Zug, which is operated by Zug-based Bitcoin Suisse. On July 7th, Zug published a press release on its official website stating its plans to offer digital identities for its citizens. According to the press release, the digital identities will be based on an app that secures personal information using blockchain technology and associates it with a crypto address. The system is completely decentralized. Thus, the citizens will register their identities on the app independently, which will be verified by the town's own identity control procedures. The Swiss government, in cooperation with external partners, is currently focusing on a centralized solution to creating its own digital ID services. At ImaginitTV, we have created a token that allows for seamless, agile microtransactions within virtual and augmented reality worlds. We offer a digital identity for our members. With an avatar working on your behalf, your secure identity can help you earn income from our messaging model even when you are not physically present. ImaginitTV is on the cutting edge of virtual and mixed reality technology, as well as what I believe, and the Switzerland government believes, to be the most important aspect of blockchain tech: the security, privacy, and efficacy of digital identity for transactions. This is Joy from ImaginitTV. Pleasure to speak with you today.